Welcome back to Editor's Roundtable. We're just doing a roundup of all that happened this week, and Harish Biani is sitting with us to discuss that. Harish, the one stock I wanted to ask you about was Zomato. I mean, I know you may not want to give your comment on individual names, but just in general, some of these businesses like Zomato have done phenomenally well. In fact, the entire consumption space, look at something like an Avenue Supermarts, that too is doing well. How do you pick and choose in this space now?
No, it's fairly simple that you look at the capital cycle, which is whether capital is entering a particular sector, moving out of a particular sector. In case of some of the food delivery business, clearly it's a duopoly business and capital has moved out. There's optionality. So the range of outcomes in such cases have reduced materially, and new optionalities have emerged, and market rewards such narratives clearly. This is regardless of a particular company. This is in general across sectors, across companies, that we have seen that as the range of outcome narrows, market rewards such companies and optionality comes in, then you see a very, very swift re-rating.
Okay, well, Harish, IT is going to start being in focus next week onwards. April 12th is TCS. Infosys is on the 18th of April, but nonetheless, the focus is going to begin. What's your sense in terms of what earnings would look like? What would your approach be?
So if you recall, our last conversation clearly said that the overall IT sector scenario continues to be fairly nebulous. It's still, in terms of the visibility of how things will look like for the next 1 year, it's fairly difficult given what's happening in US and how US companies are tightening their belts. And they aren't opening up their purses for discretionary spending, which will impact IT companies. That said, if you take a slightly longer view, all the changes that we are seeing, all the changes on the artificial intelligence, ChatGPT, OpenAI, and similar other companies investing in artificial intelligence, and the overall pace of investment in IT will only keep increasing over the next few years. So according to our understanding, any disappointment should be looked as an opportunity to invest in this particular sector. And that's how we are positioning our portfolios.
Okay, let's talk about the prices of gold, right? I mean, while the equity markets have moved higher, gold has also moved higher. Silver prices have also rallied over 10% each this year. Nigel, you've done some data crunching for us.
Well, that's right. One way to play gold is you go buy physical gold, buy ornaments, or you buy these sovereign gold bonds as well. But let's focus on the way you can play it via the stock market. So I'm calling it the non-linear plays on gold as well as silver, and basically the precious metal plays. First up, if you look at it, the gold financiers, well, they could be potential gainers. And that's been proved in the past as well. We have some historical data if you're looking at Muthoot's AUM growth, and it perfectly tallies in with what gold prices did as well. So there is a bit of a relation, and that's been proved too in the past. The second point is why gold financiers could have a bit of a tailwind is because there's a ban on new gold loans coming in from IFL, and IFL's market share in in the past fiscal, that's FY23, well, it had gone to around 15% of the NBFC market, and that's jumped up from nearly around 6%. So you have one player that moves out. Obviously, it gives them headroom to grow from there on as well. And how does it help then these gold financiers? What happens is when gold prices move up, your loan to value, that comes down. So it gives them additional headroom to borrow more on the same tonnage of gold. So that's one factor. So that will help your loan growth. Now, on the same tonnage of gold, the same number of branches, well, you're seeing more amount of loan growth. Expenditure is not going up, right? So operating leverage plays out. And if that plays out, then your ROE as well does expand. And some of these companies have seen a bit of a derating in terms of their ROE. So that can bounce back. And the auctions or the asset quality as well, the reduced auctions will result in asset quality staying in check. So that's how gold financiers basically gain. Now, they are saying between the two gold financiers that are listed, well, they are saying that they prefer Manappuram in comparison to Muthoot. Why is that? Because actually Manappuram has been a relative underperformer. So as of current valuations, well, Muthoot trades at a sharp premium in comparison to Manappuram. But keep in mind, most of Muthoot's book is attributed to gold, while Manappuram, it's a little lower in comparison to Muthoot. So that's between both of them. If looking at the banking names, well, CSB, they have a high proportion of their total book that's attributed towards gold, much higher than other banks as well. So that's nearly around 48%. So that could be another play in there. Now let's shift focus to silver. Some believe that silver could outperform from here. Silver prices, keep in mind, are up by close to around 12%, in this year so far. And Vedanta and Hindustan Zinc, some of those unlikely players, well, they are the only way to play the silver move. So Hindustan Zinc, 20% of their revenues come in from silver. The EBIT is nearly around 46%. And because it's a byproduct, the margins are very, very high at more than 85%. But Hindustan Zinc is not very, very liquid. So that's why you're seeing Vedanta making fresh 52-week highs, because Vedanta has 65% stake in Hindustan Zinc. So the indirect way of playing silver could be via Vedanta into Hindustan Zinc. And that's why, in fact, so keep in mind, some of these gold financiers as well as maybe Vedanta could be a stock that should be kept on your radar. Well, Harish, I wanted your view on these names. You know, gold is moving up, silver is moving up. Either you could buy the physical gold, you know, you could play it via gold base. But what do you think of the gold financiers or maybe some of these metal companies?
I guess in general, when we look at any such sectors where there's a temporary tailwinds coming in a particular sector, we try and understand whether this tailwind is something which is far more structural in nature or something which is transitory and could go away in the next 3 to 6 months. And in such cases where things are far more structural, where regulatory tailwinds could remain for much longer because a particular player has moved out in a particular sector, plus gold prices which have been buoyant could remain buoyant, say in this particular case, we look at some of the name far more favorably and vice versa.
Okay, all right, Harish, thanks a lot for joining us and giving us your views. With that, it is a wrap on this broadcast. More news and updates continue right here on CNBC TV 18. Thanks for watching.